Oil prices tumble more than 4% after Israel's strike on Iran over the weekend avoided Tehran's oil facilities. The number of homes being sold in the UK is up by almost a third, with properties on the market at a 10-year high. And can mega cap tech earnings keep driving the Nasdaq to new heights this week? Hello, I'm Oscar Sabakti with the latest business and finance news here on TRT World. Oil prices saw a sharp decline following Israel's limited strikes on Iran, with markets reassured after the attacks avoided oil facilities. Analysts predict that the recent dip in prices could continue as concerns over supply disruptions ease. Meanwhile, rising production in multiple oil-producing nations has added to the market's oversupply, putting further downward pressure on prices. Now, Brent crude futures fell by 4.34%, closing at $72.75 per barrel. US West Texas Intermediate dropped almost 4.54% to $68.52 per barrel. The price drop follows Israel's limited strikes on Iran, which didn't disrupt oil infrastructure. Increased production from countries like the US, Canada and Brazil contributes to oversupply. City analysts lowered Brent oil price forecasts to $70 per barrel for the next 3 months. Oil prices may struggle to reach $80 this year amid that ample supply. Let's get more now with Dylan Rouge, who's a research strategist at Pepperstone and joins us now from Melbourne, Australia. Really good to have you back with us, Dylan. Let's start with oil prices because we have seen them tumble in the wake of those Israeli strikes on Iran. So it looks like investors' concerns have been eased, at least for now. Dylan, are you able to hear me?
Yes, I can.
Yes, I was asking you about oil prices because we have seen the price of crude fall in the wake of the Israeli strikes on Iran. Does that mean investors are less concerned about oil supply at the moment?
Well, I mean, we all know Israel will come back or it will lose face, right? But since Israel's attack to Iran last weekend only caused limited damage to the latter without touching any its oil facilities, so it's a positive signal for me that the heightened tensions between both parties may come to a temporary halt. And we can also observe the market is repricing the geopolitical risk from huge sell-offs in Brent crude today was priced down to around $73 per barrel. So I think Israel's limited strikes will shift market focus to other things that can potentially impact gold prices like the US elections, Chinese stimulus measures, etc. So for now, I don't think geopolitical tensions is much of a concern for the oil prices.
At the same time, we are seeing signs of oversupply in oil markets. To what extent is that depressing oil prices right now?
Well, I think the oversupply at the moment is partially because of the OPEC Plus aliens finds a little bit hard to make a consensus in cutting oil supply. Also, if Trump wins the election and we witness a right wave, he's planning to expand oil production will dilute the market shares and maybe profit margins of OPEC Plus countries, putting further burden on oil prices. Well, but to be honest, I think a more important question we need to think about is where is the demand? Since China is the world's largest oil importer, its economic outlook is still quite ambiguous despite a series of stimulation policies. So I think we can reassess the supply and demand balance of oil after the US presidential election and China's top legislators meeting from November the 4th to the 8th.
Yes, as you say, China is at the moment oil's biggest customer. And what is your outlook then for oil prices, given sluggish demand from China and in other parts of the world?
Well, I think the US is doing a good job at the moment, and Eurozone is quite sluggish in its recent economic data, while China is still struggling to recover from the bottom. And actually, we're expecting the highest legislator from China to have this meeting early in November. So the market is expecting they will give more concise stimulations in regards to the property market and also the stock market. So if we will hear the sort of stimulations measures, I think it will give Chinese economy a boost, and then it will also be a good news for the oil bulls.
Okay, Dylan Wu, great to get your analysis as always. Thank you.
Thank you.
Let's take a quick look at some other top business stories from around the world. Taiwan semiconductor manufacturing company suspended shipments to chip designer SoftGo. This decision came after a chip it produced was found in a Huawei AI processor, raising compliance concerns with US export controls. SoftGo, affiliated with Bitmain, claimed to be in compliance with laws and denied any business relationship with Huawei, providing TSMC with an investigation report. Indonesia has stopped Apple from selling its new iPhone 16 in the country, citing unmet investment in local content requirements. The government stated that Apple Indonesia has not fulfilled the 40% local content mandate for smartphones. The tech giant has invested $95 million in developer academies, but has yet to meet its $108 million commitment. Despite Indonesia's large smartphone market, iPhone 16 units can only be brought in for personal use and not for resale. Alibaba will pay more than $433 million to settle a US lawsuit by investors claiming the company used monopolistic practices. The lawsuit, filed in 2020, alleged that Alibaba required sellers to choose only one platform for their products. But the e-commerce giant denies wrongdoing, saying it agreed to the settlement to avoid high legal costs. Sluggish demand for electric vehicles has haunted South Korean battery maker LG Energy Solution. The company reported a nearly 40% drop in profits from a year earlier, announcing an operating profit of $323 million for the third quarter. Car manufacturers are also facing mounting uncertainties as the US approaches its presidential election next month. Meanwhile, housing is emerging as a core issue for many Americans in this US presidential election. Millions are facing an escalating housing affordability crisis. The issue is particularly acute for African Americans. Randolph Nogle visited the US city of New Orleans, which has one of the worst racial wealth gaps in the country.
Robert has fought for his home through displacement.
So the house has moved this much off the foundation.
Destruction and disrepair. He now faces another uphill battle, with his home in need of a new foundation, after the Make It Right charity rebuilt it in the aftermath of Hurricane Katrina. Once the face of his community's resilience, Robert lost his mother and his granddaughter after floodwaters breached the levees and flood walls nearly 20 years ago.
So we had all the credentials to receive help and all the responsibilities to expect help, but it didn't come.
Hurricane Katrina hits. The levee breaches flood this community that was home to a community of mostly homeowners, not exclusively homeowners, but mostly homeowners and mostly African-American homeowners.
20 years later, the front stoops of houses that washed away are all that remain.
And you had people who were displaced, and they came in and were told, you're going to get $20,000, you're going to get $30,000, you're going to get $40,000. And some of those folks found angels in the form of organizations like Lore9.org and a number of other nonprofits and volunteers who came in and said, we'll help you. But most of them didn't make it back.
New Orleans is just one of many American cities struggling with housing at a time when rents are surging nationally, along with homelessness. In this U.S. presidential election, housing has emerged as a key issue for millions of Americans who face insecurity on one of the most basic needs, shelter.
Only 25% of the need is budgeted for annually. What we've been doing is this weird, perverse version of corporate welfare.
But conservative politics runs deep in Louisiana.
My grandfather was a staunch conservative, didn't want government either on his back, in his pocket, or worrying about taking care of him. He said, I can take care of myself.
Calvin Alexander, an election official, is also a resident of New Orleans' Lower Ninth Ward, who was forced to rebuild after Hurricane Katrina.
When it comes to a lot of the programs that politicians come up with, in my opinion, they seem to make the problem worse rather than solve anything.
A decisive factor in this election will be how many African American voters show up to vote.
And as long as you cast a vote, then you can either stand in criticism or stand in support. But if you don't cast a vote, the best thing for you to do is shut your mouth, move along, let the next person step up and vote.
An enduring belief in America's democracy, even if the road home stretches on a little longer. Randolph Nogle, TRT World, in the U.S. city of New Orleans.
For Britons, the housing market continues to be a hot topic as prices soar and demand remains high. With the new government's first budget being delivered on Wednesday, let's take a closer look at the market and the challenges facing buyers and sellers alike. Tülay Kalyon Haznadaroğlu reports from London.
The UK housing market has experienced another surge this October, with houses selling faster than in previous months.
I think the market has been, certainly over the last 18 months, it has been fairly volatile. There's been quite a few ups and downs. Obviously, we've had a lot going on by way of rate changes, and it's been very volatile. However, fingers crossed, it does seem like it is starting to stabilise a little bit now.
As we enter the final months of the year, there are no signs of the market cooling down. According to Rightmove's latest house price index, the number of homes available for sale is 12% higher than last year, marking it the highest level since 2014. The average 5-year fixed mortgage rate is 4.61%, up from 4.55% last week. That's the first weekly increase since May. The median asking price of an average home now stands at $483,000, having risen by only 0.3%. But how long is this surge expected to continue?
I think it all really depends on what happens with the base rate. I think the base rate coming down in August was positive again for consumer confidence, and I think it gave people that confidence to go, I'm going to get my remortgage now, I'm going to go and buy now. I think it will be heavily dependent on how the Bank of England operates over the next 6 months as to how long this sort of positive surge lasts.
British home buyers are now feeling more confident due to easy mortgage rates and supportive housing policies from the new Labour government. In the UK, a roof over your head can cost more than a small fortune. But with lower interest rates and optimism about the future, the outlook for the market is still positive. Now all eyes are on the upcoming autumn budget to see what effect, if any, it will have on the price of bricks and mortar. Tülay Kalyon Haznadaroğlu, TRT World, London.
Well, joining us from London now is economist Steve Keen, who's an honorary professor at the University College London. Great to have you back with us, Steve. All eyes on the Labour government's upcoming budget. How do you think Keir Starmer will address this pertinent issue of housing affordability in the UK?
Well, the usual way of modern politicians of trying to evade the problem, put sympathetic noises out about the expense of housing while doing nothing to reverse it. I am extremely cynical about what a politicians will do, given decades of experience in watching them see obvious cures to the problem, which is reducing the level of borrowed money that's used to buy housing, continue evading that, calling it a supply side problem, doing stuff on the supply side, and probably boosting demand by raising the amount of money they give to first home buyers. And decades ago, I nicknamed the same policy in Australia, not the first home owners boost, but the first home vendors boost. And I expect Starmer's going to do the same thing. So it will end up, whatever policies he does will cause the inflation of house prices to continue and make housing less affordable for Britons.
Yes, because on the campaign trail, Keir Starmer and the Labor Party really made housing affordability a key issue. And one aspect that they said that they would address was what you were saying, the supply side issue, that they were looking to unlock tracts of land across the UK that were previously untapped in order to boost housing supply. Do you think, is that easier said than done?
That's one way to put it. Definitely. One of the great problems about housing, first of all, it's been turned from a consumer item, a long-lived consumer item, obviously, into a speculative object. And when you look at the the level of increase in house prices over the last half century, the UK has got the highest increase in house prices relative to consumer prices and wages of any country in the Western world. So, you know, what is actually large part of this is many politicians themselves are now landlords, and they're not about to see the value of their equity fall. And they always come back to saying it's a supply issue. But supply of housing is incredibly rigid because it takes about a year to build a house, and it's all intensive labour. It hasn't been industrialised in the way that many other products have been. So it's a nice little excuse. They can wring their hands saying they're doing something about a supply. What they do about supply is insufficient. If it was sufficient, they'd reverse policy anyway, and you end up with the same situation. I describe what they're trying to achieve as expensive, affordable housing.
Interesting. Now, we know Rightmove's latest survey shows that there are actually more houses on the market, so it really is a buyer's market, at least for October. That's kept prices in check to a certain extent, but do you think that's a bit of a blip in a longer-term trend of rising prices and short supply?
Yeah, it's a bit of a blip. I mean, the governments have the capacity to create money. They're not aware of it, but they do. And what I've seen with certainly the Australian government in my time over there, and now in the UK as well, they'll use that power to keep our house prices going, keep inflating house prices. So when you're caught unawares, as Spain was in the global financial crisis, the UK as well to some extent, America definitely, you can see a huge plunge in real estate prices. In America, they fall by 40% over about a 3-year period. But when they're aware that it's possible to happen, governments will use their money-creating capability to maintain the bubble. And I expect the same thing to happen with the Starmer government.
Okay, well, let's see what they unveil in their upcoming budget. Steve Keen, great to have you on as always. Thank you.
Okay, welcome. Bye.
Well, still ahead on the program, we'll take a closer look at tech earnings as they keep driving the Nasdaq to new heights this week. We'll have more on that after the break. As the US presidential race tightens, investors are staying bullish, driving the US stock market to new heights. The S&P 500 has surged 22% this year, hitting almost 50 record highs along the way. That's as the artificial intelligence boom drives huge gains for the so-called Magnificent Seven, the name given to a group of high-profile tech companies. Shares of Nvidia, Meta, Amazon, Microsoft, Alphabet, Apple and Tesla make up more than half of the S&P 500's year-to-date gains. But the market's unusually high concentration around a few big tech companies is now putting fund managers in a tough position. Major investment funds like Fidelity and T. Rowe Price are now being forced to offload some of their holdings as the market rally has pushed them close to limits set by market regulators in the US. The Internal Revenue Service requires funds to keep large holdings, anything over 5% of assets, below 50% of their portfolios. While exceeding this limit due to price gains alone isn't penalised, maintaining regulated investment status is crucial for tax benefits. Losing it could severely impact fund performance, with frequent rebalancing and potential capital gains taxes cutting into returns. Well, let's get more on this now with Dennis Kenji-Kipker, his Research Director at Cyber Intelligence Institute. Great to have you back with us, Dennis. The S&P 500's impressive rally this year really has been driven by just a handful of tech stocks. Do you see this narrow concentration as sustainable, or could it pose risks for the broader market?
Yeah, in my opinion, the concentration of these S&Ps 500 really is really dangerous and could cause definitely a concern for several reasons. So we have on one hand increased volatility. So where just a few stocks drive the market, the performance becomes highly influential, leading to greater market volatility, and a downturn in these stocks could also trigger a broader market decline. And we have also certain valuation risks. So some of these tech stocks have seen significant valuation increases, raising questions about whether their current prices are justified by for future earnings potential. So if investor sentiment may shift, these stocks could experience sharp correction. And last but not least, we have a lack of diversification, which is always dangerous. So a concentrated market reduces diversification benefits. Investors relying heavily on a few stocks are exposed to increased financial risks here.
Now, one significant event that could sway the markets is, of course, the US presidential election, which is happening in about 9 days' time. How much of an impact will that have on stocks, do you think?
It might be possible that it has an impact. So we have several reasons here. One I mentioned before is increased volatility, but the second one are also geopolitical tensions. So we have geopolitical tensions and economic uncertainty, and these both can lead to increased market volatility as well. And this could cause sharp swings in stock prices, especially for tech stocks, which are often more sensitive to changes in investor sentiment. And there's also a still open question of the supply chain protection also in the United States. So this global conflict could also disrupt certain supply chains, impacting production of tech components and devices. And it's currently not clear how it will be politically solved. And this could also lead to shortages, higher prices, and possibly slower growth for tech companies. And last but not least, it's all about investor sentiment. So negative news and uncertainty, politically speaking, can dampen investor sentiment, leading to a sell-off in tech stocks. And this could be exacerbated by concerns about the potential of this outcome of the further elections.
Another driving force behind tech stocks, of course, are earnings. We're expecting more big tech earnings this weekend in the coming weeks. To what extent do you think they might continue to drive this tech rally?
I think the earnings are of relatively high importance here, but we see several issues that are also important. So we see increased selling pressure. We see at the moment reduced liquidity and also the potential for market correction. So we really have some overcrowded positions here. And when a stock becomes heavily concentrated in a few large funds, as I mentioned, it creates a situation where these funds may need to sell a significant portion of their holdings to adhere to diversification rules, and we have to consider the market impact as well. So the sudden influx of selling pressure can drive down the risk, the stock price, even if the underlying fundamental remains strong. And this is all things that are connected to the problem of these reduced liquidity, which comes to market depth and price volatility as well.
Okay, Dennis, Kenji, Kipko, we'll have to leave it there. Thanks as always for joining us on the program.
You're welcome. Thank you.
To Nigeria now, where more men are challenging traditional gender roles and breaking into the female-dominated beauty industry. Kalechi Emekalam caught up with one of them who's holding his own, making bold statements in a culture where career paths can be limited by society's expectations.
At the heart of Wuse Market in Abuja, Ebere Chigozie is focused on perfecting a customer's nails. For the last 5 years, he's built a reputation in a profession dominated by women, winning over clients with skill and dedication. What started as a temporary gig has turned into a fulfilling career.
If you know what you can do as a living that will fetch you a good money, a genuine money, it's better you do it. You don't depend on anybody.
As for Ebere's female clients, they appreciate his attention to detail, often remarking on the care and precision men like him bring to their crafts.
I feel when I go out with whatever my nail tech does for me, I receive more compliments.
In Nigeria's patriarchal society, breaking into fields traditionally reserved for women isn't just a challenge for men like Ebere. It's also reshaping conversations around employment in the West African nation. With the country's unemployment rate hovering at more than 33%, Nigerians are realizing that job opportunities shouldn't be limited by outdated stereotypes. Despite these barriers, the rise of men in the beauty industry is an encouraging sign of evolving social norms, offering proof that gender lines are slowly being erased. This shift in perspective is crucial for broadening career possibilities in Nigeria's future workforce.
That is what we need to do. Government, in terms of building human resource capacity, NGOs, in terms of supporting that kind of transformative design, our school curriculum, in terms of building and training people from the word go. That mindset that this one is men's job and that this one is women's job. That mindset is how do we transform it?
The beauty industry plays a vital role in Nigeria's economy, generating employment and encouraging entrepreneurship. The success of men in the beauty business shows that diversity not only enriches the industry, but also has the potential to inspire broader social change. Kelechi Amekalam, TRT World, Abuja.
And that is a look at your latest business news. Thanks for watching. Stay with us, though. Next Tech is next.